Okay, welcome to our 6-month review of the Horizon Scan. It's an important part of our program. We run a monthly review of the world as it is and the impacts of certain trends and traces within all of that. So that comes together on a monthly basis with Catch the Wave, but over the last 6 months, we wanted to just take a little moment of reflection to think about what's been happening in the world and ultimately how that might impact and work to create opportunities for our businesses and also identify potential hurdles, threats that we might face and think about how we can actually modify the relevant impact of all of that. So from this perspective, this is the Weave, there's the team, there's Adam, myself as co-founders. We're delighted to say that we worked again with Magdalena as our facilitator and co-facilitator on our iTeens program back in February for the University of Essex, which is a great success, working with 3 businesses there with a group of 40 plus students to help think through an innovation challenge relevant to each of those particular businesses. And so if you want to know a little bit more about that, we did back in February, March of our, or I think it was in March of our Catch the Wave, we did a big analysis of that particular program. We worked again with Vicky over the last 6 months to boost our social media presence, to engage on LinkedIn, and also to see that particular community grow and develop as well. We're delighted that the Mighty Networks community has grown this year as well, significantly. So we're now at 300 members, around that sort of number in that particular space. And we've also made a commitment to founder wellbeing as being our primary mission and our primary driver. We would want to arrest that founder burnout. And it's not because communities are really good at doing that. It's not because founder burnout is something which is esoteric and doesn't really happen to anybody. It's actually vitally important that we start to find ways of inhibiting and creating inertia in that lost capital when a founder burns out. One of the things that we can do is build this community, make this community a place for access to resources, to collaboration, to talent, to finding finance, to doing all of those different things. But it's most important for us within the community that we make that commitment to mental resilience, to focus, to agility, and giving ourselves that opportunity to engage with the pause process and actually before we move ourselves forward. So we're modifying the huddle. We will announce that. We're going to try and draw up some areas there. We're going to go into a Monday mindset event, and that'll set us up for the week, and then we're going to go back in through a Friday reflection, and that will be within myself and Sandrine's domain of trying to get the community to feel more in control and also give them the resources when they identify founder burnout. So this is a great quote. Back in 2023, at the end of that, we lost Charlie Munger. He was the right-hand man of Warren Buffett at Berkshire Hathaway, and he was a font of great knowledge and great wisdom. And we live this particular quote within our world. We recognize we don't know everything by any stretch of the imagination. We equally know that what we want to do is be more inclusive and learn consistently about what is around us. So knowing what you don't know, in other words, engaging with things around us that we just simply do not know, is more useful than being brilliant and brilliant at one thing, many things or whatever. And we know at the end of the day that we're not in that case. We want to engage with the wider area. We understand that business is systemic, the startups need to be systemic, they need to be focused upon how to grow their business within that experience of the environment. So what is a systemic startup? A systemic startup is a business that's designed to recognize and deliberately be aware of these driving forces around us, whether they be forces for changing the environment, around the political, the economic, the social, the technological, all of those various areas. So what makes the system work within that? Any system has a clear purpose. Any system is made up of elements, and those elements have interactions. And what we do within the world of the Weave is we work on these elements within you. We work to identify where those elements exist within your business. We also work with you to create narratives and to create stories that lead to interactions, that should create these moments of change within our business, and that can drive us to achieve more, but to achieve more smartly, to actually go through that process of reserves, of building up reserves, whether they're financial, social, community-based, technological reserves, whatever. So one of the tools that we use within our business is this, the business model canvas. We've used it. I've used it for, well, really since I first came across it when I got hold of the book, Business Model Generation by Alex Osterwalder and EPNU. I attended a masterclass that they ran in London for a weekend, and where they educated us in the use of the canvas and how we worked with it. And I've worked with it really for the last 12, 13 years in developing businesses at the university with the students, but also using it on my own businesses and using it with other people's businesses, and providing this tool as an insight and a way to do it. This particular blog, which is the links down there, but ultimately would demonstrate how there are multiple ways that you can use the business model canvas. But what you can use, and what you really understand about it, is that it's 9 building blocks of a business. They are not silos, they are building blocks. And like any building blocks, there is areas of connection where they are cemented into place. But they, in the case of these, what we're talking about is having something which is more movable. I always like to think of that building block, but maybe they're more Lego than they are brick. And therefore, from that perspective, what we're saying is they're movable. They are able to connect and connect in different ways with each other in that particular process. So we use this in multiple different ways, but today we're going to be thinking, or I'd ask you to think about the building blocks within the business. And when we think about the things that are happening around in the world, what does it do for our strategy? What does it say to us? What's our next set of actions that we want to deliver within our business that are going to make the change? And the other aspect of this is, how can we be more innovative? How can we be driven to change through this particular process of understanding our wider environment? And what would that look like within the reflection of the canvas? So here is the idea of this horizon scan. And it's about, in a way, sort of kind of expressing a viewpoint, understanding through the mnemonic. You may have come across it in a truncated form called PEST, which is the first 4 of these, the political, economic, social and technological. But it was expanded, it's been developed, and there's now a new sort of kind of additional 2 on the mnemonics, which are environmental and legal. I think they're all interrelated in some degree. The economic is certainly going to drive the politics. Politics is certainly going to be a part of the legal. Legal will probably be, involved in the technology and responding to the environment. That in itself will ultimately lead to social outcomes. But the whole point of it is that what we're going through here is a systematic way of considering the wider environment and what it holistically can do within our business. Using the canvas in this particular space is actually thinking about those driving forces and the modified changes that could appear in each of those. Are our customers changing? Is there a demographic shift going on? Are we getting richer? Are we getting poorer? Are we targeted to this particular person? Are we indebted? Are we cash rich? All of these questions that exist within the business that define who our customer is and the kind of value that the customer is looking to create or to extract from us, and equally what we're trying to extract from them. And a key driver, obviously, and we're going to be talking a bit about that today, quite a bit about it, is the technology side, the AI, the things that are going on in the world around that. So ultimately, from this perspective, PESTLE is a hugely valuable process. We conduct these on a monthly basis. We give you that insight through Catch the Wave. You can download that and follow us on the LinkedIn page. All the details will be through our socials at the end of the webinar. Please do stay connected. Please do look at all of that, because we believe we add real value into that particular process. So what's been going on? What's been happening for the last 6 months? And I think this is really important to actually start to reflect on some of what that past 6 months has been about. Certainly from the end of 2023, we just finished 2 negative quarters of growth in the UK, and we were sitting in a position ultimately from where we were in a technical recession. And from that perspective, there were certain things that were really sort of challenging around us. And the general forecasts at the beginning of the year were for more negativity. They were for a deeper sense of cuts in interest rates, more mobility from the banks, the central banks, whether it be the Fed, the Federal Reserve Bank, the European Central Bank, the Bank of England, or Bank of Japan, or wherever around the globe, that people were going to be reacting to declining prices, which were an expectation given where the underlying commodity markets were trading, the underlying areas of kind of reflection about where prices could be moderating within that particular space. So it was a pretty kind of brutal and bleak start to 2024. Growth was definitely sort of considered to be on a very sort of weak trajectory, and the UK was still, at the end of the day, expecting, I think at the beginning of the year, something like 3 to 4 interest rate cuts from a 5.25% level, 5.5%, right the way down into the kind of 3.5%, that sort of area, relatively rapidly. We were always on the side of maybe slower is better, because there were areas of stickiness within inflation that we were concerned about. Doesn't mean to say that we weren't comfortable that inflation was going to fall. We were, because I think that was generally an expectation, and we were seeing that in the purchasing managers' reports. We were seeing that in the commodity indices. We were seeing that in a number of different ways. But there were equally areas of growth within the economy. One of those was in employment. Wages were definitely trending above inflation. There was an opportunity there for certainly there was a lot of industrial action, disputes, but it wasn't just in the UK. There were a huge amount of industrial action and disputes across the globe, in Europe and certainly in Asia, in the Far East. And one of the things that we focused on at the beginning of the year was the Bangladeshi situation, which was pretty intolerant, but ultimately they were looking for a huge increase in their minimum wage, which, although there is less correlation between wage increases and the final finished price of the product, it would have still been a driver to higher prices in clothing and footwear, given the fact that Bangladesh, India and China and a lot of the Asians are primarily the bulk providers of the finished product in the UK. So there was an awful lot of concern around certain things there, whether it be that made us feel that first and foremost that the bank would be cautious. Second, that the inflation numbers would come down, but maybe not as quickly or as dramatically as some had anticipated. And that ultimately we were going to be led by other central banks. And the indicators that we were picking up from the comments from the Fed, from the indices in Europe and the bankers in Europe was that, yeah, they were all looking a little bit shy around lowering interest rates. Doesn't mean to say that that's the ongoing situation. We think that a lot of the cost pressures have been absorbed, so we're likely to see stability in CPI at some particular point, and that ultimately will lead to new sort of rate cuts within the system. This is a measure of CPI. CPI is the consumer price index. It's you may be more familiar with the retail price index, but CPI is something that we use for comparative purposes across the international stage. But at that particular point, what we notice is that there was a significant decline in prices, or not in prices, should I say, in the rate of change of prices. So now we've got inflation around that 2%, 2.6, around that area. Ultimately, what we're saying is that prices over the course of the year have increased by 2.6% on the back of significant price rises in the past. So prices are still more expensive than they were before, but there are definitely signs that that rate of change has diminished and has certainly looks as though it's going to start to stabilize at a particularly lower level. If we get that stability, and I think we need to see potentially two or three more quarters or prints of inflation numbers to actually understand that. But if we get that stability and some of the pressures that might well have been around start to ease within wages, within that particular area, I think what we'll end up with is a decline in rates. Some are calling for 3% over the next I think over the next 6 to 9 months, we probably wouldn't be that bullish on it, but ultimately we do see that there will be a decline. But I still think that people have accommodated some of this move, and therefore there is a limitation to what can be, expected on the back of that. But that doesn't mean that bonds, or certainly from the perspective of interest rates in general, that there will be a situation of concern. I think those investment tools will still attract investment, but ultimately what I'm kind of looking at is that slowdown to actually manifest itself in that particular area. You can see this is not just a UK story. This has also been happening across all of the globe. We've got pretty much inflation on a downward trajectory. Sticky is where you are. If you look at the US there, which is the purple line, you notice that they arrived at the junction primarily because they had a very much more proactive legal aspect around their inflationary policies, or around what they were after in terms of their pursuit, and equally that there were some economies that weathered the inflationary spike that much better in the first place, France being a prime example. But the US has also had that kind of fillip of being isolated and insulated from a large proportion of the inflationary push because of their own domestic food production, their own energy production and the like. So from that perspective, there have been lots of various different movements and harmonizations within that. But as you can see, we're kind of all heading into that convergent area around that 2% inflation rate, which globally kind of adds impetus to this idea that globally rates will start to edge lower. And when they do, and we're already seeing certain central banks like the ECB, like Canada, other banks like that start that easing process, you will see that we're kind of going to expect that particular area of decline. But a lot depends on the world, and a lot depends on growth, and a lot depends on various things around the economy. So as you can see from growth has been that kind of horrendous sort of stable, area, big dip as we got there back obviously with the pandemic, back above that kind of area. Certain economies have absolutely had really strong growth and domestic growth. US in particular has managed to have that, but again we're starting to converge into that 2% growth area, and a lot of if you like, the consensus within that showing a similar picture across the globe. And I think there are people who are forecasting 3.5% global growth for next year, primarily with the developed economies being much lower, and therefore India, China really kind of leading the way in terms of growth. I think China's got a bigger problem when it comes to its property market and its banks as well. Those banks our exposure to those banks is pretty, I would say, limited, and to a degree ring-fenced because of the limitations to investment in those particular banks. But the crisis in housing in China is real, and if you go and take images and pictures of vacant property and what's going on within that particular space, you could be looking at a significant drain and burden on the Chinese economy going forward. It's a byproduct, if you like, of transitioning away from a system which was very much focused upon domestic or international trade into exports, into an economy which was trying very hard to domesticate its own economy and become much more about driving value in China. So that transitional process would lead to a big boom in property, led to a big boom in ownership and home ownership and along those lines, and a challenge, and it's ultimately led to a challenge within that particular sector. So the general consensus is, yeah, we've still got the crises around us when it comes to Europe. We've still got the crises when it comes to the Middle East. We've still got all of this stuff going on. But globally, one would anticipate that growth will be relatively benign, and that inflation will be relatively benign. And that's what they term, or the economists and the pundits term, Goldilocks, in terms of what that particular outcome is. No stress, no strain. Always a risk when people talk about Goldilocks, because that kind of also sums up that kind of almost lackadaisical, benign kind of a process. And there are still too many things to think about when it comes to the risks around that particular system. So GDP per capita, which is a great measure of outcome within that, shows this pretty stark equivalent. It's huge productivity growth in the US. There's huge gains in GDP per capita there, primarily because they've been ring fenced a lot of the time around some of the negativity of the economies when it comes to the amount of, I guess when it comes to the cost of living crisis, all the rest of it, that's still an area. So, many reasons have been sort of kind of, the US was more independently sustainable when it came to food over energy as opposed to Europe and the UK. And the size of the quantitative easing program is also very much involved in all of those relevant areas. So you've got to kind of consider the QE, quantitative easing, which was the mechanism that we managed to get ourselves through the pandemic with. Was larger versus GDP in the US. And also there was a very interesting kind of article that was written by the Economist, or was it Bloomberg? I can't remember, or somebody or other, that turned around and said, well, actually, the US invested a huge amount of its furlough, whereas in the UK, we basically spend hours on living. And in the US, they had either a larger runway, a savings rate that was higher, don't know for that in that regard, but ultimately the US was in a better position to take advantage of growth, and it also had the tech sector, and we can't underestimate the impact of that tech sector on growth within that particular area, even though tech jobs have been absolutely deluged in all of the major 7 big technical companies, but there have been an absorption of that talent pool into other areas. So the tech sector versus Europe and the UK is another reason why potentially some of that productivity gain, some of that growth in GDP per capita per head was also kind of created or area there. So the aims are to catch up with the US, and when you were listening to the politicians, they all talk about the UK or pockets of Europe becoming the next Silicon Valley and all the rest of it. Well, in reality, that's too much of an ask. We can get better at what we're doing. We can improve depending on what the legislative environment is all about. We can do a lot better when it comes to delivering financial services, when it comes to delivering creativity, when it comes to it's all about how do we empower people to actually get us to that particular point. So when we talk about people, when we talk about democracy, I think that the problem is that there is a real negative perspective around democracy, and not least because of the kind of sort of elections which have been one horse races, or just simply being polarized to give people an endorsement, not least saying it's the Russian elections or whatever within that particular space. But ultimately, over the last 6 months, we have seen some enormous number, 40 odd countries having elections, or at least some that were aiming to have elections. So, and we're expecting another 40 over the next 6 months to actually hold those, not least obviously in the UK, but also in the US in November. So democracy, if you like, and 100 years ago, you would never estimate that more than a quarter of the 2 billion population back 100 years ago actually had some form of autonomy or power to be able to actually cast a vote in favour of a particular style of government. Now we've got population closer to 8.5 billion people, or wherever it is in that area, and 2/3 of that population is at least in the process of or having the ability to vote. And there's 2 things that within that, one of which is if we take away some of the noise and the outliers around disruption and the rest of it, there is an element of political stability that will manifest itself at the end of 2024. And when you create political stability, whether it's good stability or kind of negative stability in the sense that with the political parties that are in power, haven't changed or whatever. But at the end of it all, it makes decision making in a political sphere that much easier to accommodate. Not saying it's all going to be ideal, not saying the outcomes are going to be absolutely wonderful in every single economy, but it's just the sheer fact that political instability is a drag on growth. And that's where I think some of the good news can actually start to manifest itself. But it has to take leadership. It has to take people out there to actually change the way that we work politically, collaboratively together, both politically and externally politically as well. So it's good news and bad news in the system. And it's one of those things there that also is a paradox as well. The more democratic that the globe has become, the more cynical we are about representation and or lack of it. And I think the poll that I saw the other day was, a large percentage of Americans are unhappy with their two-leader system based around who they've got. So there is a very, very sort of definitive line between the right and Trump and the left and Biden, but at the end of the day, the American system is that there is a large proportion of people in America who are dissatisfied with those two options. And you've got the same to a degree, and I don't know if anybody saw the program, the debate last night. I only got the clip of it this morning where people were talking about, are these two candidates the best example of leadership for the UK? And again, I think what we're getting that. So leaders somewhere along the line are going to have to emerge. Somewhere along the line, leadership is going to either have to be materialized from the pool and the pond that has been elected, or it's going to actually emerge from within and underneath. And that may lead to some instability going forward. But at the end of it all, if we go back to this idea of we are voting in institutions and not people, then we can withstand that. And I think there is a opportunity going forward within that. So in that kind of contemporary global political system, that paradox of rising rates of democracy leading to that kind of evident cynicism is probably something at the end of the day that will lead to additional forces of change. And that will be maybe, questioning, destabilizing, but it also will actually allow people to actually bring in maybe more representative areas to actually counteract some of this declining trust. So there's perceived inefficiency and corruption that exists within governments, and I think none of us are endeavourably removed from that. There are economic disparities that exist as well, that widening inequality between various people within the economy. Some people will start to think about how they can address that. And I know there are certain people out there, including people like Daniel Priestley, that are trying to or have indicated deep concern with the loss of wealth leaving the country through the millionaires, 10,000 in the UK that are anticipated leaving, going to tax havens, going to various places like that. Yeah, it's sad, and it's kind of a drain on that particular area. But actually what we wanted to focus on are people who want to bring about change within the system. And I think that's something which will require new leaders to emerge over time. Hopefully younger leaders, hopefully leaders from different genders and different backgrounds, so that we don't become more so homogenous about our thinking. So there are lots of ways of doing that. So that political polarization, which is increasing within that particular, which is exasperating distrust, that will hopefully change as the next generation starts to create more and more influence into the political sphere as well. And again, I think one of the challenges that we've got to face, and think may well be out there in the future, is media influence. Generally, I think that the media is very sort of kind of restrictive in its thinking around that. So I think, again, social media is continuing to unwind some of that polarized media stuff, and I think again that could actually start to amplify both areas of distrust, but also bring in new social media, new media, and new ways of consuming media, which will build trust within that particular sphere. So going forward from here, what we're looking at, those countries that ultimately have got sort of kind of high social cohesion, energy levels, more of a vision orientated culture, wanting to get things done. Those countries are, are likely to see relatively relatively cohesive social system that will actually drive their economies forward. So some of the highlights we include on this particular of the vote so far. Finland's vote, change of government there from their sort of kind of central left to more of a centre right government. So ultimately, from that perspective, it was the first one where we had the Ukraine war, so we had also the NATO situation. Russia, well, it was a bit of a shoe-in from the perspective of Putin, who claimed something like 80% of the vote within that particular area. And, obviously from that perspective, that leads to certain, kind of conditions that people are thinking about, longevity of Putin as a leader and that kind of thing within there that are going to play on people's minds. Taiwan, well, it's consistent also that it's an antagonist towards Beijing, certainly from the point of view of China's sort of kind of desire to occupy and to get that. That's a source of tension in Asia and a source of tension out there. So a Taiwanese new government certainly hasn't backed down and is certainly increasing military threats with warplanes. And China is obviously responding with, flurries into their particular airspace as well. So that's an area and a source of potential conflict and tension. Again, Indonesia, the only reason we've included that is actually the third biggest electoral base to vote this year. And ultimately, it's been sort of kind of, again, a sort of an extension of the current regime, so there's been no real significant shift there. It's a conservative leaning party in place, and it's one that has been and probably remains being slightly criticised around authoritarian actions. South Africa is very interesting. So the first time since apartheid came to an end and the ANC had an unassailable lead within the African political sphere, corruption and a long period of dissatisfaction in the economic performance of the country, and has led to not the ANC to lose power, but certainly to lose its overall dominance. And that has forced them to start to think about coalitions, think about negotiations, thinking about how they manage that area of development. But from a kind of perspective, South Africa is still a major driving force of the African continent. It feeds into all of the other countries within that particular space. And, because it's got such high levels of corruption, high levels of dissatisfaction, if they can start to modify some of that, get some of that back into the realms of reality, then it starts to maybe filtrate through to what Africa can do in terms of growth and opportunity. Mexico, I think it's a landslide victory again for the new Mexican president, and she was, well, first and foremost, she is a she, so it's the first time Mexico has ever, elected a female president. She's Jewish, another first, and she's also a left-wing climate activist and scientist with a very heavily academic background. And she was the former mayor of Mexico, and she brought in massive amounts of change that really transformed Mexico itself. I think the challenge there is Mexico plays a key role within US and Latin American areas, and also Mexico is not certainly shy of putting its support behind Russia and the BRIC economies. And of course there's been European elections, and there has been a sense of shift to the right of the parties, and I think in less so than maybe some people were predicting, but the alliances that are now being formed across Europe, where centre right is being sort of kind of propped up with far right, Maybe far right will be tempered, and probably both will happen. Far right being tempered, but the centre being elevated to more anti-immigration, more controls around the movement of population, more nationalistic policies. I'm not saying for a minute it's going to break up Europe, but what I am saying is that it's a source of tension within Europe. And I think the challenge there is that if we're in the process in the UK just about to elect a left-leaning UK government, that dialogue between a very right-wing core element within Europe is going to be strained. And I think a lot of that rhetoric around opening doors, negotiating opportunities back into Europe, again, nobody's ever saying that we're going to rejoin Europe in the full sense of the word, but ultimately that communication, those leanings into that particular space will be challenging potentially for any left-wing government because of the stringent right-wing environment that exists within Europe and will exist for a number of years now. So that populist area, whether it's Italy and or the loss of Emmanuel Macron and the rise of Le Pen and the far-right parties there, these are things at the end of the day that will challenge the structure of of Europe. There are kind of caveats within some of this, in the sense that a far right or a right-wing nationalistic agenda within Europe could be seen as a form of strength. The challenge is Le Pen is very pro-Putin, whereas on the Italian side, she is where Giorgio Meloni is very much more anti-Putin and pro-Ukraine. So, you've got balancing acts within that particular space. You've got Germany really sort of having a coalition, and ultimately with the kind of I think they're called the AFD, and there are significant sort of kind of areas of development there. So there's a lot of right-wing, extreme right-wing stuff that's happening within Europe, which will ultimately add challenges to our renegotiation for better access to European markets and better mobility of labour, maybe better transitioning stuff within Europe. So that's kind of that hard right, winning the hearts and minds of the younger generation. It's been interesting as well for the rise of social media as a force guiding political intent in across Europe. I don't think we could quite honestly say that TikTok has been the driver. I mean, certainly I think the next time we get an election, it will be. And I think if they start to think about lowering the age of voting, that could well happen. So these elections are being won not just on the back of social media, they're being won on the back of various different movements within the right-wing world. And I think social media is playing a huge element within that. So this idea of the BRIC economy, the Russia, China, so you've got Brazil, Russia, India and China, they're starting to become more cohesive. Putin has really made an effort to charm each of those relevant areas, and it's put us, and it's put the West, and it's put Europe and potentially the UK on the back foot as well. We certainly, do not want to see the BRIC economies form a much more cohesive pro-Putin stance, and I think Europe has got to get its act together because any re-establishment of a Cold War type situation developing between Europe and Russia and the BRIC economies will be really damaging for us and for an area. I think for the UK, the biggest single thing that we have from a renegotiation perspective is our defence area of that, and Europe will lean heavily into that NATO sort of alliance, very heavily into that particular space. If Trump wins, then there'll be challenges around that narrative as well. But I don't think Europe, I think Europe can't rely on US in that regard, and it needs to start playing on the front foot when it comes to this area. I think there are opportunities for it to be established in that. But But if you want, Putin's biggest accomplishment out of all of this is securing more extensive military cooperation with North Korea, and ultimately through that back door through to China, and also into other areas like Vietnam, and China itself. So, Hanoi has upgraded its relationship with Washington last year. The Biden administration wants to deepen its ties, wants to do those various areas, but ultimately Putin is smoothing his way through that particular area. And that's creating sort of economic force for Russia, which is then allowing it to continue to prosecute the war, to continue to deliver the weapons that it's been able to deliver. And it's a leaky situation. And I think that's another aspect of concern, is the leakiness of the sanctions that exist against Russia, primarily either whether that's through gas agreements to keep the pipelines open, or alternatively other products like fertilizers, which are also coming in from Russia and undercutting European production, but also becoming integral to the European farming environment. So, there are loads and loads of things that we have to consider within that particular space. They're not all bad, because I think Europe needs to put on that kind of face and move forward. But I think that it's a real challenge to our own perceptions, and one that we'll have to kind of get to grips with any sort of new political area. So there's a great kind of expression that, he who lives by the crystal ball can be cut by shattered glass. And at that point, what you're trying to say is that we can't predict anything. So we're not in the world of predictions, we're in the world of scenario building. And it's challenging when you've got so many elections on the horizon, when you've got so much potential uncertainty around various different areas. And I think that from that perspective, the elections will focus up on priorities, but whoever gets into power will face a whole host of challenges, not least our budget deficits, whether it's, kind of the movement of cash, the relationships, trade relationships, all of these various things. They will face a huge issue and concern to drive through certain policies. The good thing from their perspective, Labour's perspective, and maybe from the UK, is that they can withstand a degree of volatility given the potential for such a large majority. Saying that, if that majority doesn't materialise and they ultimately are on much closer footing between the other parties, then they're still, at the end of the day, will probably have some room and wiggle room within that, and maybe they could even get a honeymoon period, particularly if the equity markets and the bond markets are starting to reignite within that particular space around falling interest rates, and that underpins the recent move in stocks, investment strategies, and the like. So there are lots of potentials, what ifs, what might happens within that. So you can paint many, many different scenarios, and we've got three that we've painted for you at the end of the particular session today, and you'll get to, and we'll publicise this and put these notes into the community as well. So we're looking really in that world of a post-Blair, or kind of the victory that he had, being similar and equivalent to maybe to what Starmer's can have within that. And I think that this kind of whole idea within this particular area, if the US markets can maintain their rally, and if there are certain sort of kind of breathing spaces, evidence of maybe some levels of volatility at the higher end, particularly when Nvidia stocks, which have been one of the drivers of the equity market outperformance in the US, Nvidia being the chip maker and manufacturer for AI, and became momentarily the biggest company in the world. I think the reality is it's a one-trick pony. It's probably that one trick's got much further to run. So I'm not saying for a minute that Nvidia might be too much of a single, but it is a one-trick pony. And whereas those other companies, Apple, Microsoft, and are ultimately Amazon, are more diverse about what they're offering. They have more revenue streams, more different ways of doing stuff within that area. Excuse me. So the Nvidia stock has corrected. It bounced back. It's corrected again. There's lots of stuff going on within all of that, and you can't look at these moments of volatility in isolation. You've got to live through and look through the longer term trends and whether they are sustainable. And AI is here, and AI is a significant driver of potential productivity. And again, within the scenarios that you can paint, there are some really strong growth outlooks that could manifest themselves when you think about what once the the technology becomes embedded in the processes and practices of most businesses. And then it starts to, how does that manifest itself in the labour market? What does it ultimately deliver in terms of productivity gains from manufacturing, healthcare, biotechnology, agriculture, financial services? All of these various different markets will be impacted. Retail is not alone, everything that we're thinking about, entertainment, hospitality, all of them will have some impact on the back of artificial intelligence. So as inflation moderates towards what we consider to be central bank targets, investors will certainly feel a lot more optimistic about what's going on, and interest rates, as we said before, will start to come down a little bit more aggressively over the next 6 to 9 months. And this creates an opportunity again for potentially some windfall stuff to happen in the UK, not least because if the Bank of England stopped selling its bonds that it took into the system on the back of quantitative easing, it will actually stop realizing losses, and that means that the Treasury may well end up with additional funds to actually put to work in the economy. So that could potentially be good news and a windfall for the next government. And it will change maybe some of the dynamics of the interest rate markets and some of the dynamics of the investment markets. If the government modifies its pension outlook in terms of its investment strategies and what it's done within that particular space, don't forget the pension markets got regulated very, very heavily post, and probably for a lot of you may not remember, but Robert Maxwell, who robbed the pension fund, or his own pension fund, to keep his business going. Ultimately, that brought in a load of different regulations around pension industry. Don't think we're going to go back to where people can pillar their pension funds to do this, but what we may end up back with is this idea of investments within the UK. And the UK, one of the worst for actually investing in our own market space. And when we're indices with the FTSE 100 or the FTSE 250 or whatever within that particular area, what we need to be also thinking about is what can we be doing to really ignite the lower echelons of investment opportunity. So we started in the UK with a much broader investment environment, but we've got much more work to do within that particular space. So the aspirations of, Rishi Sunak or Keir Starmer about being the next Silicon Valley, all of that kind of stuff may well have to go on hold until you free up the investment strategies to become more aggressive in terms of what they want to achieve, more diverse in what they can actually invest into, so that we can start to stimulate the pot at the bottom. So equities in the UK have been for a while under the cosh in terms of valuation. If you look at this particular chart, courtesy of Reuters, which ultimately shows where, if you like, the UK stocks have underperformed versus the S&P 500, which is full of technology stocks and the like. So as you can see, the US has gone woof in one direction. The UK, on the other hand, has gone whoa in the other. And now we're in that particular point, potentially, ultimately, I'm not saying we're going to have a massive switch round into outperformance, but we could get some recovery of that outperformance in the UK. Post an election with a big majority potentially, nothing at the moment to untowards to start to, kind of concern around the equity markets. You might see a post-election honeymoon period. If they get a windfall, if they get some aspect of taxation in process, if they get some of their growth agenda through within that particular area and they feel bold that this is what they need to be doing, there is potential to see the UK actually reverse some of that opportunity. And actually what that does and why it matters is that a better UK environment for investing feeds its way down the food chain. and that will open up more opportunities for smaller businesses to actually start to engage with with better investment opportunities. One caveat all of that, and I think that we've got to get better at it as well, and there's a lot of resistance within this, is the crypto economy, the cryptocurrencies within this particular space. They exist, they're heavily invested in, yep, they're massively volatile, and ultimately they're hugely correlated with Nvidia as a stock. So if you think you're buying Nvidia, you could probably think about buying at least a portion of Bitcoin, primarily because crypto, which is run on blockchain, is a big part of AI, and at the end of the day that could feed itself through. So there's a bit of a connection, or at least a relatively robust correlation of 0.85. So one movement of unit of Nvidia is equivalent to a 0.85 unit of Bitcoin moving in a particular direction. That correlation is just a 3-month correlation. There may be other ones you want to look at, and I'm not saying for any instance, but this is the sort of thing that you should be thinking through when you're thinking about investment opportunities and what you're actually doing and where you're actually putting your money. In terms of the investors and the pension funds and the people like that within that area, they're on top of all of this kind of stuff. I'm not telling them anything new. They know at the end of the day where they're going to be putting their money. I want them to start to think about those opportunities for investment when it comes to investing in the startup ecosystems that exist in the regional areas of the UK. Yeah, we've got Cambridge, Oxford, Shoreditch, London, wherever, but we know at the end of the day, and we can see it all the time at places like the University of Essex where we work, and within the North Essex region, we have got some phenomenal businesses, and that's again what the Weave is all about. Highlighting and showcasing some of these amazing businesses that are actually leading the way in this particular space. I can't tell you about some of the businesses that we've worked with because there are so many out there, but I will tell you that technologies that these guys are thinking through, business models, circularity, sustainability, all of this kind of stuff is real and happening in our regions, and we need to transfer some of that crystallization of talent that exists within certain areas and crystallize it and bring it into this particular area here. That's what we're all about, those opportunities and helping founders on that particular journey to build sustainable, robust businesses. So let's think about social trends. Let's think about why they really matter within this particular space. We've spoken about the politics to a degree. We've spoken about the economics around this. Now let's think about some of these social trends that go through and why they are important. So one of the things that when we think about social trends within that, whether it's migration and immigration, whether it's aging populations, whether it's changes in the demographic, all of that kind of stuff that will lead into changes and investment opportunities within health, within the care side. These are things that are going on. I actually think that care industry is a massive opportunity for innovation, right? The next generation and the generation, coming through, the ones that are technically more savvy, the ones that have lived their life in a social space with augmented reality, with all of this different stuff that's going on within those areas, the world of care is changing. It's becoming personalized. It's becoming really dynamic and very, very responsive to the needs of the individual, whether that's people who are suffering with dementia right the way through to those that are just simply living out their last part of their lives. The kind of care, the kind of services that we can provide. There is a huge investment opportunity to make this a really vibrant end of life, but a prolonged, beneficial end of life experience. So I think from that perspective, having an aging population, having new technologies, having the next generation coming through who are technically savvy opens up massive opportunities in that particular space. So from that point of view, within that area, the social kind of the things that have held things back to a degree is, we understand that, immigration, we go on to talk a bit about immigration in a little while, about some of the trends that exist within that particular area. But one of the things that we want to kind of look at within this particular sort of kind of point is that it's a trend. It's something at the end of the day that we're maybe fighting, and we might be fighting because we're a crowded country, that we don't necessarily understand you know, that why people want to keep coming over to here to actually deliver what they're doing. But at the end of it all, it's a trend that's going to impact both the way that we handle it and the way that we actually live with it, but equally the way that we protect, you know, our world and our borders to be able to actually accommodate and live effectively within that rising sort of kind of area without that kind of resistance to immigration. The challenge is obviously that there are always two sides to any story, and immigration is a very polarizing subject, but it's one of these trends that we're not necessarily going to be able to bat away all the time. It's there on our doorstep. It's one of those things. So, you know, that kind of world of diversity, equity and inclusion, a lot, again, people speak of it in terms of woke, you know, this is, you know, basically appeasing, tick box, all the rest of it. But in reality, it's real, you know, it's on our doorstep, it's in our way of life. And it's that kind of process that needs, at the end of the day, to be able to actually be elevated in those conversations without peer pressure, without being pilloried or without being, you know, ripped across the coals because you have an opinion. And I think at that particular point, that's where these discussions need to come in. So not having or adhering to a policy will likely, you know, feel that you're excluded from the tender processes or from the procurement processes. You've got to embrace some of these particular areas within your business. You've got to think about what opportunities they exist within that particular social environment and the social trends that go on within that particular space. And we're already seeing more and more of that within there. So here's a useful, hopefully, matrix that will help you figure out some of the various things that go through within the world of social change. So what we've done here is we've taken the relevant generations, not saying I like the names of all these generations, but they exist. And then what we put into is those various different areas of development, from travel, interest, hobbies, hospitality, education, family life, the things at the end of the day that may well be defined as social drivers, social areas. And what we tried to do is then populate each of those particular squares with a generic understanding of each generation's approach to that. What this will hopefully help you do is also figure out where your current marketplace is, who you're talking to within that particular area, maybe some of the additional areas that your market may well be interested in, and asking yourself, is there more value that you can provide within that particular space? But also looking at the next generation of customers that are moving forward. What are you doing today that you might need to modify, improve to create that level of opportunity in the next stage of development? So this table, it will be there obviously in the slides. You'll be able to use it. Hopefully you'll find it of value in what you're doing, but it'll give you some insights to be able to think about the value proposition that you're putting together. So let's turn our attention to some of the demographics that are running through the UK at the moment. These are things that we've extracted from the ONS, from various other different reports. UK is on a rising population trend, as we know, but the future is looking a lot greyer, right? The proportion of people aged 60 and over is growing faster than any other age group. And we know that, and by 2100, the global population will probably be in excess of 11 billion. And of that, you know, at least a third, maybe more, will be over 60 years of age. And there will be a new age group of people living beyond that century, beyond that area of development. So again, it's an aging population. That brings massive challenges in the world of care, health, hospitality, or everywhere, right? Housing, the lot. That brings so many different challenges into it. But equally, where there is a challenge, there is an opportunity, and an opportunity to position ourselves in such a way that we can take real advantage out of that situation. So, you know, from that point of view, these are UN forecasts. They're not my forecasts or anybody in that particular area. So these are things that we managed to get through. So over the next 15 years, between sort of, well, when the survey was kind of projected, 2021 to 2036, we expect the population is expected to grow by 6.6 million people. So that will take it up to just shy of 76 million by 2046, but 67 million by where we are now, to 73, 74 million by then. This includes something like 540,000 births, more births than deaths, and also net international migration of 6.1 million people arriving into the UK. So migration becomes a big kind of process. Like I said, it's a force that we can push away and we can bat away as much as we try to within that particular area. But what we have to understand is globally, people will move, right? Unless there is a huge and significant acceleration of acceptance and growth within those worlds and stability within those worlds, we would expect there to be a continued movement of labour and people into the Northern Hemisphere and finding their way into the UK, which for a lot of people, understandably, is scary because we are, particularly in the southeast, an incredibly crowded environment. And what the politicians and the city builders and the people like that, the local politicians, need to understand is that the more we put into one area, the more crowded we become in that one area, the more dissatisfied and the worse our living standards and our way actually starts to feel, whether it's real or not. So we have to understand that there needs to be dispersion if it exists. We have to understand that there needs to be demographic shifts across the country, but equally we also have to understand that there needs to be policies and strategies that can help modify and manage what we anticipate will be continued waves of people trying to get into the UK. This is accentuated here in the terms of the immigration pattern. So you can see this is up to 2023, why immigration has become such a force for significant change within the UK, and some of the things that is done there. So the blue line is the percentage of non-EU immigrants that are entering the UK through various different means, legal, so including students, including family members, including all of those relevant people, but also those skills that we need within the UK to function throughout health service, our education systems and our labour force. So at that particular point, that's the non-EU percentage. And as you can see, that's been on a rising trajectory for quite some time. And then from the other side of that, what you're also seeing is the non-EU, right, or the EU people, which obviously post-Brexit has gone in totally the other direction. So where we are pushing away European immigration, we're actually then seeing that huge drive, that huge growth in immigration from non-EU countries. And so from that perspective, that's a changing dynamic. Do we anticipate that it will continue? We think that it will. We think that unless there is a massive push to stability in lots of countries around the world, and that that ultimately will continue within that particular space. Don't make any comments about Rwanda. Don't make any comments about border patrols. I think there needs to be a strategy, a coherent strategy that manages this particular process. And that maybe takes the best of what Australia and Canada have, because they have got a process, an approach, and the one that can shape our overall stance. But these are trends that will impact and create opportunities, as well as potentially resistances within the UK. So rising population, aging population, will we become richer? So the GDP per capita trend in the UK, is volatile. In 2023, UK's GDP per capita sort of kind of dropped back down. We experienced a minor contraction of around sort of just less than 1%, but that was post a robust period of growth into 2022, where that GDP per capita grew somewhere in the region of 3.2%. We focus on GDP per capita because it's a better measure in a way for how individually we feel like we are contributing to the UK or to the economy. So for 2024, that kind of expectation is again for a moderation of GDP per capita, maybe again around that 1% level of decline. And there are definitely influencing factors and economic policies that could be pursued that could see that growth. So it's either going to be, a significant boost to growth at some particular point over the next 6 to 9 months, which could be falling interest rates. It could be reshifting around of the pension industry. It could be, at the end of the day, the Bank of England not selling out its bonds or asset portfolios. So all of these things at the end of the day, and also if we've got that declining inflation environment and certain of those drivers to higher prices diminish even further, so inflation becomes maybe a process of deflation, that adds value to declining prices in certain areas. And I think, again, there are a lot of indicators as to why that might add some real value going forward and create some opportunities for for us feeling better and better off within that particular world. So some of the other areas within that, again, there's volatility. We can become a richer population. We can go within that, but again, it depends on which scenario you want to create and want to paint. So one of the areas that we've spoken about for quite a while is the travel industry, and it's because it's becoming more significant as an expenditure on our time and our energy. The travel industry is certainly, and the use of leisure time is certainly one of those things post-pandemic that sort of resurged back into the world, and tourism will certainly take a greater proportion of global savings and share them around the world in that regard. One of the industries that may benefit from that will be things like timeshares, where people will look at extended sort of ownership of properties and sharing out that ownership. And I think there's elements of that going forward. Technology will play a big part in the way we experience travel, whether it's priming us for travel and that overall experience, or whether it's simply finding the best means and mechanisms to book a particular holiday within that particular area. So all of the websites and maybe some of the things that we've done and become much more accustomed to, the Airbnb models, the booking.com model, the Trivago models of analysis, they're going to be augmented in that particular space with technology and ultimately with AI over that period. So timeshare has sort of kind of taken a back seat on where we thought it might be. We thought it might become more relevant and more eligible, or there'll be more about it through celebrity endorsements, through that. Interestingly, there are lots of resort building going on. Saudi, the United Arab Emirates and Saudi have spent billions into the tourist industry, into that particular space, developing huge, great big resorts. Massive 5-star sort of luxury travel, and certainly bringing in eco environments and travel generally is on an upward trajectory. I've used the word booming in my analysis, but there are points, there are certainly areas where you think that it's becoming very heated in terms of what people are wanting within that. And I think socially within that particular space as well, people are very much connected to this idea of travel. The other area that we've spoken about in the past, and is certainly again picking up more and more content, is two things. One of which is the combining of business and leisure travel as one. So there is areas of development within that are really interesting, and I think that sort of kind of combination of the two is a great area of development. So combining that kind of combination of the two together. And also what the impact is on the peripheral supply. So luggage is becoming smarter, better in terms of being trackable and traceable. So you lose your luggage, you'll find your luggage, you're able to actually almost identify what's being carried in the luggage through the suitcases, which will make customs that much more efficient. There's loads of different technologies that are going in within that. Clothing is another big one as well. We've seen the rise within the clothing industry of UV protective clothing and beachwear, which ultimately is because of the rising temperatures globally and because of these pockets of heat developing, and because you've got places like Greece, which have got sort of areas of big sort of kind of areas of UV sort of damage. You've got that area of ecosystems that are responding and personalizing the development of the travel industry, rising on the tide of more and more people and families and business people traveling to various areas. There are always the downsides. The rising travel leads to CO2 production, but again, we're seeing the rise of far more efficient jet engines that will ultimately lead to larger offsets in the CO2 production. And we're also thinking that those travel companies of the future, those kind of will combine lots of that personalized experience and will be able to offset an awful lot of that kind of sustainable environmental damage that you associate with that. There are also challenges in domestic markets for growth in travel, not least pricing out the domestic or the people who live in that particular country, driving up property prices. But certainly, that's a response to those local environments. They want the travel dollar or the travel euro or the travel pound. They want it in those particular areas. But at the end of the day, that needs to be a dispersion so that it doesn't lead to people being displaced and people losing their homes without some form of gain or some form of development. So big areas that you're looking at over the next sort of 2 to 3 years. Theme parks, I think, will be a big beneficiary. We're seeing sort of kind of a significant growth within that. Certainly hotels are responding in a very different way. Their growth in hotel bookings, whether it's through the kind of the Airbnb model or whether it's additional models like that. But passenger volumes on the cruising industry are also rising. So cruising is becoming a much more significant pastime within the travel industry. All we're saying within that is when you're thinking about the businesses that you are operating in, is there an area that you are operating that you could potentially lean into one of those particular desires or trends? Retail is also another big area of development. The green consumer is certainly realistically becoming more significant in their buying habits. You're seeing that develop more and more, and one of the ways that that's sort of kind of manifesting itself is creating more and more circularity into the fast fashion industry as well. So again, people are thinking about buybacks and returns, and more companies are trying to become more innovative without establishing that greenwashing environment. So there is real evidence of sustainability driving consumer behaviors, whether that's reports by Deloitte and other people. I think certainly the other sort of kind of highly reputable people are predicting or have shown how that sustainability agenda is driving buying habits. But there are challenges because of the cost of living crisis, because of various other things. There is a disproportion of people who are also unable to engage with sustainability as an offer because of the price differential at this particular point. That can be modified through different technologies and through distribution of that within the industry. So if the industry is committed to reduce their overall output within that particular area, then ultimately they should and they need to be collaborating between themselves to get to that particular point. And you're seeing more of that kind of collaboration develop over a period of time. So the habits are changing, the trends are there, the growth in ethical and sustainable products are really sort of kind of being elevated. Big brands, Tesco's, Sainsbury's, Waitrose, they indicate their responsibility to the consumer by changing and by adding their environmental footprint on it. Is it greenwashing? You have to be aware that that exists. You have to be aware that we can say that we're on a zero emissions target, but actually the reality is that we're not. We're heading in another direction. That kind of stuff. But this is where accountability and clarity and visibility of the brands themselves needs to be really elevated within that particular space. On the last Catching the Wave, we talked about Crocs, we talked about plastics, we talked about the rise in different organizations buying back their products, talking about sustainability within that particular area. That requires clarity, requires transparency within that. And I think the consumer is asking more and more of these questions. Whether it's being driven by other agendas, who knows? But at the end of it all, there is a surge in opportunities that exist within this particular area. And if you can create something within your business, within the retail environment, that embraces that circularity, that rewards return as opposed to just consumption, or engages in rental as opposed to sale, or looks at creating services out of products, then ultimately you can engage in a much more sustainable environment. That can act as a big differentiator for yourself. Housing is a big thing. We've spoken about it in the past when it comes to catching the wave. We've spoken about various different housing initiatives. We're a massive fan of modular building and modular housing. We're a massive fan of using and utilizing the world of modular to develop communities and build sustainable housing projects. The challenge is that that's not embraced by the traditional, so it's a long-term strategy. There's inertia in that particular process. But let's not kind of beat around the bush. Housing is in a crisis in this country. And the basis of our analysis was this particular Bloomberg article, which I think resonated with us massively. And back in March, we spoke about home ownership as well as being out of reach for a large proportion of people, which ultimately creates a lot of haves and have-nots and a rental sector that is ripe for innovation, right? In this particular country, we have got to create a rental sector which is fit for purpose. And I believe, you know, there are people out there talking about it, wanting to develop this within this particular space. We've got better opportunities with platforms, with technologies, with accountability and transparency to start to elevate that. We also have different ways of buying houses. We've got the ability to build communities, not just housing developments. This has been one of the big kind of bugbears for a lot of villages, and not least one where I'm living, but I know that there are other villages where housing development has just been a plonk-on area of development within greenfield sites that hasn't allowed for integration, that hasn't allowed for communities to be connected. It's just simply developed more housing and brought more issues like, you know, an inability for our schools, doctors, hospitality establishments, everything like that to cope with the influx of demand. So we need, at the end of the day, to revisit some of these particular challenges. How we open up home ownership without driving prices beyond the pale. How do we increase the rental environment through transparency, through platforms that will create better opportunities for a much, much more open and, you know, participatory rental and leaseholding system. All of these things are massively important. The headline for this particular one was that we've got to be building a town or a city the size of London if we're going to try to actually accommodate the issues around housing. But it's not just we have a population, we have a housing crisis. We have a population that needs to be managed and understood. We have a housing crisis that ultimately will feed back into a population problem. We have a wage environment that is difficult for people to live, who have regular jobs, important jobs, to live and accommodate the cost of living crisis. These things at the end of the day are manifest of themselves, but they are all interconnected and related. Hospitality is another big area of innovation that we wanted to touch upon today because we think that it's a big area of growth and opportunity. Not least creating that personalization through different technologies, but also through the development of better eco-establishments, better hospitality. We also have spoken a lot about the sober market environment because the next generation just simply isn't engaging with alcohol in the same way that previous generations have. This creates opportunity in some of those sober establishments. So we're talking about what you can be doing to make that experience that much more better and more accommodative to those people that don't want to drink, that those people who want to experience the hospitality industry in its full rigor without actually feeling isolated or set aside because they walk into a pub and order a zero beer as opposed to a regular beer, or a zero wine or a zero gin and tonic as opposed to a regular gin and tonic. We've got to get through that cultural shift, and that will come with benefits as well. There will be more opportunities to create those environments which are more inclusive, more inventive, more experiential and personalized within that particular space. Technology has a lot to do within that. So there is an awful lot of innovation that's happening within that. This increased focus on sustainability and eco-friendly practices, development of resorts and hotels that cater for the older clients, the people without children, the people at the end of the day that want something different within that particular space. There's growing demand, from guests, that want those organizations, those hotels, to demonstrate their commitment to sustainability, not simply by saying don't use your towels, but by using and investing in sustainable or circular models. Again, hospitality and food waste is a huge opportunity, right, to turn the practices of hotels and food into something which is much, much more sustainable, about growing their own food supply within their industry, using food waste as a byproduct into biodegradable, creating vertical farms that can feed into that kind of whole host of circular areas. These are challenges that the industry will face. These are challenges that they are facing, and they're looking at how they can develop that particular process. So if you're in the hospitality industry, think about travel, think about sustainability, think about circularity as business models that can help you really develop and grow a different perspective and a different audience. Health is a massive thing. With this last 6 months, we've been talking about injections that handle diabetes. We've been talking about injections to create weight loss. We've been talking about trends in all of these areas within the industry that are actually starting to manifest themselves as the world changes. We struggle with weight as a society, as a global family. We eat beyond our capacity. We digest calories that are beyond the living area. We're far more sedentary in our lifestyle, and we're doing a lot of stuff within that particular area. This is an opportunity for us to actually start to engage in a much, much more open and discussive opportunity around health and the way that we live. Technology, personalization, all of these things at the end of the day will open up opportunities to live a better and a more productive and healthier existence. Not least personalized drug care, not least simply the fact that exercise will be brought to the home, and that people will be able to start to engage in weight loss situations and also care situations that become far better. So technology is one of these things. So as we consider technologies within our business and the way that we work within this, AI has obviously had a manifest effect on that, but so few of us are still engaging with AI in any form of analysis about what it's doing to create and develop those interactions within the process. Technology will play a significant role. We want to be able to articulate our learning, our education, build our communities. We want to be able to do that within this particular space where we don't lose that human interaction. We use technology to create efficiencies that will allow us that opportunity then to broaden what we're actually doing. So these are really challenging areas of it. And what we would say within there are so many different technologies like AI, but also other technologies that will allow us to do this. This is what we use the canvas for as well, is to identify what technologies exist in each of those relevant areas. If we've got a CRM system, how is it integrated with our accounting system? Why is it there to drive revenues? What can we use that CRM system to grow channels, to develop different areas? We need to be thinking about holistically all of those interconnections within our business. And technology has a fundamental area. We're really fortunate in the Weave that we've got Adam, who is a technology buff that really loves technology. You've got me, who is a technology nerd, but absolutely loves the idea of what it can do for your business and how it can really help you get to that particular point. So all I'd say is just take a fresh look at your business. Start asking the questions, how can technology facilitate and develop different activities within the business? And then reach out to the experts that can help you really think about it. One of the areas that we're really focused upon going forward is the development of immersive technologies in storytelling within that particular, in our businesses. People are moving away from the two-dimensional. They're moving away from images and pictures and photoshops and this, that, and the other, to how do we experience something, even if it's not real, but it's immersive. The metaverse is changing the way that we will digest the narratives and the stories of business. The thing about it is to date, it's very much in the high end. If you got a budget of millions and you're working in Disney, Formula One, you're working in IKEA or retail, then immersive technologies are open to you. You can do that. But what happens is technology is moving so far forward and so fast that it's leaving relatively good technology behind and making it redundant, or at least diminishing the cost. How long ago was it that we were sitting in an environment, say for instance, where somebody would say, oh, I want to create a video, or I want to create a GIF, I want to create this, and it was going to cost many thousands of pounds to be able to do that. Now it's few pounds to develop any of those particular areas. A video, a GIF, some form of technology. Moving forward, the immersive technologies that we're experiencing today will open up and become that much more realistic in the future. Is our storytelling relevant for today and tomorrow, and how can we make it so? And it doesn't have to cost the earth or the financial capital to be able to actually engage in far more productive ways of delivering it. Environmental, this is a big area of thinking. Everybody, every business needs to have an understanding about its footprint, what it's doing within this. It's not just simply thinking through about, do I tick a number of boxes? It's actually about our customers and our businesses and our procurement processes and the opportunities that we're creating need to have transparency. They need to have that environmental carbon footprint around us. Sustainability is not going away. The world is heating up. We're seeing it more and more. May, as much as we would like to believe it wasn't in the UK, was probably the hottest month that we'd had in May ever. So beyond recorded or when it was recorded. So from that perspective, we know that there is more volatility in the weather. There's more rainfall. There's more pockets of drought. There are more heat temperatures. Everything that's happening in the Middle East, the Hajj, the thing at the end of the day, it's killed thousands of. These are events which are becoming much more violent and volatile over the period of time. Our footprint, our carbon footprint, is becoming an essential metric within our business. Engage with it, get ahead of your competitors, start reaching out to people that know how to make that happen. So the environmental side of what we're doing is really important. One area that I would ask you to think about is just those small changes that we can make within the business that will actually open up better opportunities for our customers. If you've got a product, how can you make it a service? If you've got something you sell, how can you make it something you hire? What is it at the end of the day that you can modify within that particular framework that can open up those different areas? We were delighted the other day when we saw, one of our businesses that we've worked with in the past, that we've supported in that, win awards for accolades for their sustainability and their footprint within that area. So, the businesses that we can champion, that we can put out there, that we can start to help see the environmental area. We're talking about taking over the People Planet Pint networking events at the Weave. We will make that a central feature of our offer within that particular space. We will drive membership into People Planet Pint. We will open up sustainability into that particular world. Legal changes, really, there are so many legal things that you have to consider around. Everything is interconnected. New governments, new ways of working, new things that are going. Holiday pay, new entitlements, new ways of protecting through different legislation, employment laws, all of these things. They may sound bureaucratic and heavy, but they also create opportunities to elevate the conversation to our audience, to the people that we want to know. So at that particular point, engage with and do searches around the legal aspects of your business. Try to figure out what's changing, what's out there within that, both from an employment perspective, but also a governance perspective around the products and services that we're selling. There is big changes afoot in the retail industry, right? Around the high street, around the way that we're trying to legally set up the high street to go to that particular, the next stage, because we're fearful if we don't change the legal framework around the high street, we're going to end up with big holes of cities where there is nothing at the end of the day in those environments. So we need to arrest that. We need to understand that regionally, we need to create that level of legal protection that will allow us to be able to develop, and that is underfoot. There is research, there are papers, green papers that look at all of that. Very quickly, I just want to touch on 3 scenarios that we want to kind of introduce here. These are extreme scenarios. They're not predictions in any stretch of the imagination. In each individual scenario, all we say to you is, what does it mean for our business? What can we be looking at within that particular space? What can we be doing in scenario 1, right, that ultimately will impact? What does that mean for the relationships with Europe, with our supply chain, with the various things within the business that we're thinking about? It's not a great place to position that. We're not saying it's a place where we imagine it's going to go. In fact, far from it. But ultimately, we need to understand and stress test the things that are going on within our business and within the world around us. What can we do that would ultimately open up pathways, doors, and opportunities both for ourselves, but for a wider audience and our community? The second one might be an event like this. What would happen to that kind of implosion? Again, to our supply chains, to our labour markets, to the people that would actually help us, even our market space within that. Are we too crystallized into selling into that particular environment? Is there opportunities within that particular space that would ultimately open up, but also could open up those other interests outside of Europe into other areas? Should we be looking at diversification? Should we be thinking about broadening our market space within that in order that we can create something which is a bit more resilient? There's an outlier. Again, that's a very positive outlier, that more of that cohesiveness around political cohesion, around political stability, ultimately will lead to Putin exiting of that he will become pariah, that something will happen within Europe that will allow that end game to be pursued and that will allow growth, and along with all of the perfect storm of AI, of circularity, of sustainability coming together to drive forward, right, global growth above those expectations. What does that mean for our business? How can we be prepared to really accelerate what we're trying to do within the business? What are the indicators that we should be looking at that will allow us to start to think through whether that's actually going to happen? We did a blog on it, we did a post about it, we spoke about that scenario. All we're saying is that forecasting and predicting in a world of volatility is not about pinning one option and one choice. It's about exploring what happens under different scenarios. And that's an important part of being in the driving seat. So we want you to keep abreast of the environment. Like I said, every month we run these particular programs. We really want you to engage with them. Please follow us on LinkedIn, download them. They go into our Margin Networks community, so be a part of that process. These are important areas of thinking around our business. We do a lot of the analysis, we do a lot of the thinking, we bring all of that together, we talk about the opportunities that might exist within that framework so that you guys can focus on what you want to be doing, but you can be doing that in an informed way. Finally, connect with us, because that at the end of the day is how we grow our businesses, through networks, through building a part of that community. It's a free resource. We're always there for you in that particular space. We're always going to be having and providing all of that insight and information. The thing is that there is a paid 1% club, and we can talk about that on that area, but that area is all about how do we build more accountability, more goal-orientated growth within our business, but we do so in a way which is pragmatic, responsive and agile, that it doesn't burn us out. That's our big message. Join the weave, stop founder burnout. Connect with us. We'd love to hear from you. Thank you very much for listening, and speak to you soon.